Hi there, in today's video we're going to be looking at a general ledger for grade 9 and how to post these journals, the CRJ, CPJ, DAJ and DAJ, how to post that to the general ledger, and then of course the whole process that goes along with it. So let's get going. The first thing that you'll see is when they ask you to complete general ledger accounts, what they'll generally give you is always a balance, so balances of these accounts at the beginning of the month. Now, basically, a general ledger is something that is done every month for a year long, for a whole financial year, and then at the end of the financial year, the business uses the general ledger accounts to go and calculate things like the business's profits, how much capital the owner has, how much money there's in the bank, how much stock the business still has. So the general ledger is a very important tool for the business. So when you have to do general ledger, you'll see they will give you balances. They will also give you some totals from your journals. And the journals I'm specifically looking at in these videos are CRJ, CPJ, DJ, and DAJ. So the accounts that have been asked for are bank, trading, stock, and debtors control, and that's all under our balance sheet accounts. So balance sheet accounts consist of assets, liabilities, capital, and drawings. And then in the nominal account section, you only have income accounts as well as expense accounts. So that is what we need to go and do. We need to do sales, debtors allowances, and cost of sales. So when we need to do general ledger, I would always recommend that you follow a step-by-step method to complete general ledger. The very first step would be to go and indicate the plus or the minus side of each account. So each general ledger account looks like a T, and on the one side the account increases and on the other side the account decreases. Now every single general ledger account has a debit side and a credit side. So the debit side is always left and the credit side is always right. So an easy way to remember that, the word credit has an R in it. So if you have a look there, the word credit has an R, and that helps you to really remember that the credit side is always the right-hand side. Now, when we need to go and indicate at each one of these accounts which side is positive and which side is negative, like I said, the left-hand side of this account, so you'll see each account is split in the middle, and it looks like a big T. So the left-hand side is always debit and the right-hand side is always credit. And how it works is we say that some accounts increase on the debit side and some accounts increase on the credit side. So the accounts that increase on the debit side are your expenses, your assets, and your drawings. So an abbreviation that people like to use is DAJ, which stands for you have to debit expenses, assets, and drawings. However, it's really easy to remember that your debt accounts are the accounts that increase on the debit side. So if you learn that acronym, you'll see debit, expenses, assets, and drawings. So those accounts will always increase on the debit side and it will decrease on the credit. And then the other acronym for the opposite accounts would be CLICK, and that acronym stands for we need to credit our liabilities, our income, and our capital. So your liabilities, income, and capital accounts, they will always increase on the credit side. Your CLICK accounts and your DAJ accounts, they will always increase on the debit side. Right, so that's the first step, and I'm going to show you practically how to apply these steps, because you'll see if you know these steps and you've practiced them well, general ledger becomes really, really easy and simple, and you can really score good marks here. So what we're going to do now is we're going to go and ask for each account what type of account is bank. Bank is an asset, and because it's an asset, it forms part of my dead accounts, which increase on the debit side. And you'll see this is always the case, so this is not going to change. Right, trading stock is also an asset. Your inventory is always an asset for the business, because the business knows if they sell the inventory, they're going to make money, and that's really good. And our debtors control account represents our customers who have bought on credit from us, and that means they owe us money, so they owe us, and that makes them an asset because we know we're going to get money soon. So debtors control, trading stock, and bank will always be assets. Then under my nominal section, there's sales, which is my income that I make when I'm selling stuff. So income forms part of click, so I'm putting a plus on the credits. Debtors allowance is an expense because it represents the sales that we've lost because debtors return stuff, and that essentially will relate back to sales at the end of the year. So in the general ledger, we keep our sales income, and another word for debtors allowances is sales returns, which is kind of an easier way to think about it, because then it simply means this account keeps track of the returns of sales, which basically will decrease the income we have. However, that only gets done at year end, so for now we just want to record it in the correct place in our general ledger. Right, and then cost of sales. Cost of sales is also an expense because it shows the cost price of the goods that we sold. So cost of sales will always have to do with trading stock. Okay, there we go. So no matter how many accounts they ask you to do, you will follow step 1 by saying which side is the plus side and which side is the minus side according to dead, and click. Step 2 would then to start the accounts by opening them with their balances. So balances at the beginning need to be entered always on the plus side. Okay, so I'm writing these steps very abbreviated. You can obviously write them down in more detail, but these balances at the beginning of the month means that, in a very simple way to explain it, is they say to us, bank has a balance of 40,000 on the 1st of March, and that just tells me that my bank account already had 40,000 Rand in it, which means I've got a positive bank of 40,000. So that's what we're going to go ahead and do now. We're going to start, so this I'm using for step 2, balances as at 1 March 2023. Right, so for bank, it says 40,000. So what I'm doing is I'm going and I'm saying the date they've given me is that these balances are on 1 March 2023. So the first column on the debit side, the plus side, I'm putting my month and my year, March 2023. The day is day 1, and this is a balance. So we write balance, brought down, so B/D stands for brought down, meaning it's coming from a previous month. This is money we made in a previous month. And then the amount was 40,000 with no cents. Right, so that's how we're going to enter all these balances, and they're all going to go to the positive side. And you can see I'm going to literally copy the words March 2023, day 1, balance brought down, because what I'm trying to show you here is also that this is always going to be the same. It's never going to change. The month and the year will be given to you, but when you're entering an opening balance, you'll always write balance brought down. And for trading stock, they said we've got 21,000 Rand worth of stock at the beginning of the month. Right, so we want to always start with those balances. And as you can see, I'm on the positive side every time. Same for debtors control. On the 1st of March 2023, my balance brought down was 33,000, which tells me my debtors already owed me 33,000 Rand from previous month's sales. And there we go. There is my balance sheet accounts. What you'll notice is in the balance sheet, we simply write that this is a balance brought down. What you'll notice is, and this is sometimes not all teachers are very, pedantic about this. They're not too worried about it. But the most accurate way, especially if you're taking accounting in grade 10, is to know that in the nominal account section, instead of writing it's a balance brought down, we're going to write it's a total brought down. So for sales, I'm writing again my month and my year. As you can see, I'm on the positive side, which is in sales case on the credits. So March the 1st, we've got a total. But if your teacher has taught you to write balance, it's not a train smash. It's not going to change anything. It's just really one of those small technicalities. Okay, so like I said, the most accurate way is total, and it's also brought down. So you can see it's exactly the same as what I've done in my balance sheet accounts. The only difference is instead of writing balance, I'm writing total. Okay, sales has 18,000 from a previous month. Then the debtors allowance account does not have a balance for this financial year yet, or a total. And I see the next one we have is cost of sales. So debtors allowance doesn't have one. If it did have one, it would have gone on the debit side, which is the plus side. So in this case, again, as you can see, I'm literally copying and pasting because that's what you need to do. And the cost of sales amount was 9,000 Rand. Okay, there we go. So step 2, I have done my opening balances. My opening balances at the start, at the positive side of each account. Then step 3 would be to know what your posting rules are for each journal, and then to be able to write them down. So I'm going to show you now what are the posting rules. But if you've watched the previous video where I've done accounting equation, you'll see that it's very consistent with what we've done over there. So I am actually going to just quickly grab this to show you how I'm going to apply exactly the same over here. Oopsie. Sorry, let me just add a page and then we can take that there. Right, so posting rules really are your consistent rules that you can know will always be the same in accounting. It does not change. So when we're talking, let's start with our cash journals. When we're talking about a CRJ or a CPJ, what we know is that in the cash receipts journal, we are receiving cash that will end up in bank. So every time I receive money from a customer, from the owner, from a tenant, doesn't matter from who I'm receiving this money, my bank is going to increase. And you can see I'm consistent because bank is an asset and it always increases on the debit side. So what we can say is for the CRJ, we can know bank is always going to be debited when we are working with a cash receipts journal. So that's the first journal we've got here. And that means our first column, which is bank, is always going to be debited in the bank account because it means that we've received money and our bank therefore will increase. So we will do those entries in a moment. But step 3, all I want you to do is to write your posting rules down. Now, what's really nice to know in accounting is that we've got a double entry principle. And what that means is that our debits should be equal to our credits. Now, within each journal, that principle needs to be applied. So what you'll see is bank is going to be the big debit, and then everything else is going to be credit. So if we add 40 plus 55, I get 95, plus 15 gives me 110. So you can see the debits do equal the credits. And you'll see I'm actually leaving out cost of sales. So cost of sales I'm leaving out of my bank double entry because cost of sales isn't money that we actually received. Whereas our sales income, that 40,000 is included in the bank because we did receive that money in cash. Same with the money we received from debtors. That money is included in bank. And same with sundry, that would be the rent income, the capital, and so forth. So those 3 things, sales, debtors control, and sundry, those amounts are received in cash and it went to the bank. However, the cost of sales, as I said earlier, the cost of sales always relates to trading stock. So if cost of sales always relates to trading stock, that means when I'm looking at a cost of sales total, that cost of sales total represents how much trading stock has been sold. And what that means is that cost of sales, the 20,000 Rand, does not have anything to do with bank, but it has to do with my stock. Now, what's really important is thinking logically about this. If I'm selling my trading stock will decrease, which means my trading stock account will be credit, and my cost of sales will then have to be debit. And again, this is very much in agreement with what I've done over here, where we said with transaction 3, we had a cash sales transaction. Our bank was debit, our sales was credit, and our cost of sales and inventory, which is trading stock, also went together. So as you can see, it's not changing, it's just a different format that they're asking us to do. So there we go, my posting rule. So this is something you can learn, you can study it. In the CRJ, bank is always debit. Everything else is credit, except cost of sales, because cost of sales relates to trading stock, and this time we sold it, so our trading stock is credit, it's decreasing, and cost of sales is debit. And you'll see this is going to repeat quite a bit. So there we go. The next journal is the CPJ. So in the CPJ, we are paying, which means my bank, when I'm paying, will decrease. And therefore, every time in the CPJ, my bank will be credit, and everything else will be debit. And you can see my debits are equal to my credits. 45 is credit, and 35 plus 10 is debit. So they do agree, and it is in balance. Right. So, and also what's really nice to see is in the CRJ bank is debit, in the CPJ bank is credit. So it's really opposites over there. The next journal is our debtors journal. Now, for the debtors journal transaction, the only transaction that goes there is credit sales. So as you can see, we've got 2 columns, one with sales and one with cost of sales. So as I said, with cost of sales, if you can remember that cost of sales always relates to trading stock, you'll see that exactly what we did in the CRJ, we're going to do here. Because again, in the debtors journal, we are selling trading stock, which means my trading stock is going to become less because I'm selling it, it's going out my door, and the cost of sales will then have to be debited. So cost of sales, you'll see, always goes with trading stock. Now, the sales column of 68 is really important to understand. We are selling to a debtor. So your debtor's control will be used with sales because we are not receiving cash, so we can't use bank when we're posting the DJ. However, you'll see when it's a debtor's journal transaction, same in the accounting equation, we had debtor's control with sales and cost of sales with trading stock. And that's exactly what we're doing here. We're saying our debtors are owing us more. Now, if our debtor owes us more, it means we need to debit the debtor. So the debtor's control will be debit and sales will be credit. And as you can see, exactly what I've done in the accounting equation, if you go and watch that video, you'll see that I am being consistent. And that's the thing with accounting. It really is consistent. It doesn't change. So if you've practiced it properly and you know your steps, then the chances of you getting it wrong in an exam is really, really small. Okay, next is the DAJ, the Debtors Allowances Journal. Again, note that there's a cost of sales column. Now this cost of sales column this time shows us that the debtor has returned. Remember in the Debtors Allowance Journal, debtors returns get recorded here, which means when the debtor returns stock, if I'm getting stock back from my debtor and it's still in working condition, it means my stock is now increasing. So you'll see that these two costs of sales are really just the opposite. We treat them in an opposite way because this time the trading stock's coming back. We say trading stock must be debit and therefore cost of sales is going to be credit, which is the opposite. And that's exactly what we did in the accounting equation as well. We literally swapped it around because we said the stock this time's coming back and therefore the cost of sales need to go on the opposite side. Okay, last one for the posting rule. And this obviously would go a lot quicker if you know them, if you've studied them. Obviously, I'm explaining it, so it does take a while for me to write them down. But generally, if I had to do this in real time without talking, this step should take me about 2 minutes max. Okay, last column is the debtors allowance column. Now, the debtors allowance column, like I said, is basically the sales returns. And we say then because the debtors are the ones returning, the debtors obviously don't owe the same amount. If a debtor returns stuff, the debtor owes us less because they've returned it. They don't have to pay for it anymore. So therefore, in this case, instead of debiting debtors like we did over there, we're going to credit debtors because in this journal they are returning, which means the debtors allowance account will be debit. Right, so there we go. Our posting rules, step 3, is complete. And you'll see everything is still based off of these T accounts. All right, step 4, we're actually now going to post. Okay, so here comes the posting. So post the column totals. And this is always at the end of the month. Right, so then we start with the very first column total that we had, and that is the CRJ's bank column. So CRJ's bank says we must go and debit 110 in bank. So then I go to the debit side and I put 110,000 on there to show that, yes, we started with 40,000 in bank, but now we've received 110. So we've obviously got more. This is on the last day of March. March has 31 days. We don't have to write the month again because we've already written it on the debit side. Then in bank, you'll see you'll always have to write here total receipts, because this represents money we've received for sales, debtors, and some other stuff. Okay, and the folio column wants you to show which journal are you posting from. And there we go. I've debited bank with 110. Now I'm going to sales and I'm going to credit 40,000. So I'm going to sales. My posting rule says I must credit sales, and it makes sense because yes, I do have more sales on the last day of the month from the CRJ. Now, the details we need to write in asks us, where is the debit of this 40,000? Because in accounting, we've got the double entry principle, which means for every debit, there's a credit. So if the credit is here in sales, we need to say the debit is part of my bank, because included in this 110 is the 40, as well as the 55 and the 15. So all of those amounts are debited in bank, and that is what the details have to say. So obviously in bank, we can't write all the accounts, so we just say total receipts. But in the other accounts, we write bank because that 40,000 is part of my bank's total receipts. Okay, next we have after sales. We do have cost of sales, but I'll get to that now. So let's just jump to debtors. Debtors control, we need to credit 55,000. So in debtors control, we say we are crediting 55,000 because when the debtor pays us, they owe us less. This will be on the 31st of March 2023 from the CRJ, and this 55 is included in bank. Right, so as you can see in bank, we write total receipts. In the others, we write bank. Right, sundry accounts we don't have to do because they didn't give us more details. If they did, we would simply treat it the same as we've done with everything else. Okay, then cost of sales. Cost of sales need to be debited and trading stock need to be credited with 20. So if I'm crediting trading stock with 20 and I'm debiting cost of sales with 20, that is basically what my posting rule says. Now, filling in the details, you'll see is very simple. The month is still March, I'm not writing it again. The day is 31, the journal is CRJ. And now because the debit is here in cost of sales, but the credit, we put it in trading stock, it means that in cost of sales, we're going to write that the credit is in trading stock. And in trading stock, we're going to have to write that the debit is in cost of sales. Okay, and this is on the last day of March. And you'll see every time we're posting a cost of sales column, we're going to do that same process. And there we go. I'm done with my CRJ. Next, we have CPJ. So as you can see, I'm really using my journals to guide me and starting from the first journal's first column and running through each one and making sure I'm posting what needs to be posted. Okay, for CPJ, we need to go to bank. We need to credit 45,000. So in bank, credit 45,000. We're still on the last day of the year, last day of the month, March 2023. And we write here total payments because this time, this money represents all of the payments we made that was recorded in the cash payments journal. So your bank account will really always look like this. It will always have total receipts on the debits and total payments on the credits. Okay, so now that I've credited bank, I must go and debit trading stock with 35,000. So in the CPJ, I am buying trading stock, which means I do have more stock, and that's why we're on the positive side. Now, as I said, in bank, we credited the big total payments, but in trading stock, we can say that that 35,000 is included in that 45, and therefore the credit of this amount is part of bank. So in the CRJ and CPJ, it's quite nice because in bank we write total receipts and total payments, and in everything else we write bank. The only exception is the cost of sales account or the cost of sales column that does not affect bank. But other than that, in the CRJ and CPJ, you can always write bank as your details in all the accounts except for bank. Right, and that was the CPJ because the rest is sundry and we don't need to do that. Okay, so it goes quite quickly if you've got your posting rules because it really gives you an instruction what to do. Okay, so for the DJ, in the DJ, we've got our sales column. We said that sales represents how much debtors owe us. So what we're going to do is we're going to go to debtors control. We're going to debit 68. And that same 68,000 we're going to credit inside of sales. Right? And what is really nice about the debtors journal, because that 68,000 only relates to debtors and sales, we're going to say in debtors, it's 68,000 on the debit side, and the credit of that amount is in sales. We're still on the last day, and this time we're posting from the DJ. So in debtors control, we write sales, and in sales, we write debtors control. So another word they use for this is the contra account. The contra account means what is the corresponding debit of this credit. So if the credit is in sales, where is the debit? Okay, so there I've done the sales and the debtors control posting, and then I've only got the cost of sales column left, which you'll see is again going to be very similar to what we did in the CRJ. So we need to go to trading stock and cost of sales, and 34,000 needs to be credited in trading stock, and it needs to be debited in cost of sales. So as you can see, the CRJ transaction is just above it, and really it looks exactly the same because the debit is again in cost of sales. The only difference is we're posting from the DJ this time. So I'm writing DJ instead of CRJ. In the cost of sales, we're going to write again trading stock and DJ because the credit of this 34 is in trading stock. Right, and there we go. Done with the DJ. Last journal then is the DAJ, where we are debiting the debtors allowance amount in debtors allowances, and we're crediting debtors control. So 12,500, credit debtors control because the debtor owes less, and debit 12,500 in debtors allowances. So therefore the credit is in debtors control. So we write in debtors allowance, we write debtors control from the DAJ on the last day of March. And then in debtors control, we're going to write debtors allowances from the DAJ. Okay, there we go. So the DAJ is where the debtor returns, so they do owe less. For the cost of sales trading stock part, we need to go to trading stock and debit 6,000 because when we receive stock back, it's going to increase our stock. So debit trading stock, which means my cost of sales will be credited this time. So the date, last day, the credit is in cost of sales and the debit is in trading stock. DAJ is my journal. And then in trading stock, I go and do exactly the same. This is from the DAJ. And because the debit is in stock, the credit was in cost of sales. And that's it. There I've now posted all my journals Obviously, the columns that were not relevant or that weren't asked for, I simply ignore. But this is a very good indication of what you should be able to do at this time in grade 9, kind of in the middle of the year. So this could really be a good resource. Obviously, practice makes perfect, so just watching it wouldn't be ideal. It's about actually going and physically applying these steps to make sure that you are practiced before you have to write any exam or test about general ledger. Okay, last little step is then to balance or total your accounts. So at the end of the month, it's just about saying, okay, how much sales did we make? How much money does the debtors owe us? So the accounts where there's only transactions on the one account, or on the one side of the account rather, you would simply add everything up and write the total in. Okay, so that part generally isn't difficult. It's once there's transactions on both sides that I just want to show you. It's actually really simple, but some people do struggle. So when you have to balance an account, you'll always start off by drawing 2 total lines on both sides of the account. Okay, and this is just because your debits should always end up equaling your credits. So what we would then do is we'll say, okay, which side of this account is bigger? The debit side, if I add it up, I get 150. So 150,000 is definitely larger than 45. And therefore, the difference, which amount do we need to put in here for it to equal, these two added together must equal 150. So we must still put 105 in here. That means that 105,000 is the money the business has left over at the end of the month. So that would be the balance that we're going to carry down to the next month. And therefore, if I'm carrying it down 105 at the end of the month, you'll see it's on the negative side. We don't want to show it on the negative side. So the final step would be to say the next month, which is April, brought down as 105,000. So we can see this business's bank account went from having 40,000 Rand in it to now having 105,000 Rand in it. Let's do one more. I'm not going to do all of them because you'll see the process is the same. So step 1, draw total lines on both sides. Then check which side's bigger. The debit side is bigger in trading stock. So if I say 21 plus 35 plus 6, I get 62,000. And that must go in both total lines. And then again, what is missing? So 20 plus 34 gives me 54,000. So what do I still need to add to get to 62? I must still add 8,000. And that means 8,000 Rands worth of stock is left over. And therefore, next month on the 1st of April, on the positive side, I've got my balance brought down of 8,000. Meaning we have 8,000 Rand stock available to sell for the next month. So there we go. I hope this general ledger makes a bit more sense now, and that if you've got these steps, if you've applied them, then you'll hopefully feel a lot better about general ledger.